Hello and welcome to the 17th of our ACCA P7 Advanced Audit and Assurance lecture recaps. This lecture was on assurance services. So, engagements then, assurance engagements. The elements of an assurance engagement, well, first of all, it will involve a tripartite relationship, and that will be the practitioner, i.e. the auditor, the responsible party, the person that's created the information or is responsible for it, and the users, those that are going to use the information. So the practitioner is going to express an opinion on the information that's being prepared by the responsible party and that's going to be used by the users. So it's also going to have a subject matter. In the case of the annual audit, that will be the financial statements. Suitable criteria, for example the ISAs. Sufficient and appropriate evidence. Remember, we've been saying all the way through here that you have to gather sufficient and appropriate evidence to support the criteria. And then it's going to have a written assurance report giving assurance over the information. So the engagement process then, first of all you've got to agree the terms of the engagement, and that will be in the form of your engagement letter. Remember, for the audit it's under ISA 210. The methodology will have to be set out. The reporting will have to be set out, how you're going to report to the responsible party or the users. And then you will provide assurance. So why would you provide assurance? Well, the client may want to know their business systems are sound, so they may say, right, we're not the experts, let's get an expert in to look at this business system and see if it's okay. Or it could be that there's a problem in the business and they need an expert in the form of an auditor to come in and solve the problem. It may be for you to gain knowledge of the business for a new client or something like that, or to provide assurance if there's going to be a takeover. So the implications of actually providing assurance. Well, first of all, there may be independence issues, because if you are going in to report on a firm that you already audit, well, again, that may lead to independent issues. You need to be sure that you have the specialist knowledge that's required to undertake assurance in a specialist area. So if it's on an area of IT, you need to be sure that you have that expert specialist knowledge. There may be greater liabilities because third parties may rely on the information that you produce. So if you think back to our liabilities lecture, it may produce greater liabilities, and it may also give you less audit fees. Now that's because if you go in and give assurance over a certain area, you may not have to do as much work on that area when you actually go in and do the audit, so the audit fees may actually be less. So examples of assurance services, first of all, a risk assessment. Remember that a risk assessment process within a business is necessary for controls. The combined code, for example, says that you have to have a risk-based control system which assesses the risks and then puts controls in place for those risks. So there must be a process in place. So if you conduct a risk audit, you'll be going in saying, is there a risk assessment process? Is it good? Is it bad? Does it do what it's supposed to do? And that's what the risk audit will involve. KPIs, key performance indicators. You may be going in to look at a business's KPIs to assess whether they've met them or whether they're reasonable. So you'll be checking whether they're smart, specific, measurable, achievable, realistic, timely. So are the KPIs these things? And the report will generally be around the achievement of any KPIs that they have, or the fairness of them, or the validity of them. So the auditor will be going in and reporting on these things. A value for money audit, well, we've spoken about it, or we will speak about it in our internal audit lecture. The 3 E's: economy, effectiveness, efficiency. So you'd be going in and saying, is the business or the process providing these 3 E's? So when you're auditing them, you may make recommendations to improve them, or you may profile the industry. They may be needing you to give them their place in a league table, something like that. So you'll approach their business and see how does it perform compared to the industry, or you may be assessing it with regards to best practice. Also, in this type of audit, you will go in and say, is the management of the department or the area effective, and maybe report on that area as well. So technology and providing assurance over a business which uses a lot of technology has its own implications. So there's been recent developments, there's more complex systems. All these IT systems will be very complex. You need to make sure that you have the knowledge of the business. And that feeds into something called continuous auditing. Continuous auditing is where you're basically providing assurance over information as it's produced. So very shortly after the information is produced, the auditor will provide assurance over it. And the report will be issued basically with the information as it's issued. So when it comes to e-commerce, there are some specifics that we need to be aware of. The risk management process when it comes to e-commerce, well, there needs to be a risk assessment process in place. So if you're going into a business to give assurance over e-commerce, you need to be sure that there's a risk assessment process, that there's a strong control environment, that they're applying to national standards, that they have an internal audit function, that they have access controls, for example passwords, usernames, encryption, that they have backups, that they have a good strong website that doesn't collapse easily and that has good security over it, that they maintain an audit trail, very important, so that you're able to actually trace what has happened. So the effect on the audit then, you'll need to be sure that you have the technical expertise if you're going in to give assurance over an e-commerce area. There may be greater audit risk, and that's because it's a fast moving industry, because it's more complicated, and it may be easier to pull the wool over the auditor's eyes. There's a going concern risk, again, a fast moving industry. We talked about it when we said to gather our knowledge of the business, and that increases the risk of going concern issues arising. The importance of internal audit, well, when it comes to e-commerce, there's a very strong need for internal audit. You need to keep on top of your systems, again, to ensure that you're both managing the risk of fraud and error and keeping up with technology. Outsourcing, a lot of times when there's an e-commerce function in a business, it'll be outsourced, so that will be an issue, and we'll look at that in our final lecture. Be sure that you're not setting up the system when you're giving assurance. Or you can give assurance over the system, but don't set it up, because that will result in a conflict of interest. So that was our lecture on assurance services.